Alrighty, traders, we are live, aren't we? We are live. Fantastic, fantastic. We are live. Okay, fantastic, guys. So today, guys, one thing I want to do in today's session is I want to focus on the silver and gold mining stocks or their indexes. I just want to focus on those in today's session, and I'm just going to give you a bit of an update on what's happening there on pretty much a more of a longer term basis, but also the shorter term as well too. What's happening right now, and what can we expect moving forward into the market. So I'm actually really excited for that. Let me actually make sure I bring up my screen so you can actually see it. There we go. Instead of you seeing me and Arnie, you can see me and my screen. You should be able to see my screen now, which is fantastic. All right, present to everyone. All right, we are good to go, aren't we? Yes. All right. So there we go. Fantastic. All right, guys. So before I'm going to be covering the silver and gold mining stocks or the indexes in today's session, I'm going to be covering the GDXJ, the GDX, the SIL, and the SILJ. What's happening right now in the mining stock sector, and I'm going to be giving you a bit of an overview of what's happening in those sectors there. Before I start, guys, let me make sure that I start with the typical disclaimer. Guys, do not place a trade based on what you're seeing in this session today because trading is risky and there's no guarantees of making a profit, especially if you don't know what you're doing, you haven't got a plan, and you're not consistent, disciplined, and patient. Okay, so this here is just the education only. I am not recommending, I'm not telling you that you should trade anything based on what I'm seeing or what I'm saying in today's session. Also, guys, if you, as you may know, that I've been promoting my Master Trader Lab. You can get access to that for $6.99 per month. I'm actually giving away a free trial to the Master Trader Lab. But just so you know guys, the free trial is going away, and also the bonus as well too, because I'm completely upgrading the Master Trader Lab into something more. So it's gonna be a lot more expensive. But it's going to be a lot more support and so on and so forth. So if you haven't done so yet, guys, I am closing down the free trial and I'm closing down the $6.99 per month. I'm increasing it and there's going to be no free trial. So if you are interested, this may be the last chance, or over the next couple of days, I'm going to be taking that down because I'm upgrading it more into a Master Trader Mastermind, which is I'm so excited about. I'm upgrading more content. There's going to be a Facebook group there as well too. It's going to be I'm so excited. So anyway, guys, if you haven't got so yet, go there right now, grab the free trial, lock your low price in, because after this or over the next few days, I'm going to be taking away the free trial and the price is going up because I'm increasing it to more of a Master Trader Mastermind where we can talk to each other and so on and so forth. So I'm really excited about that. Let's get straight into the markets right now, guys. So the one thing I want to I want to share with you here. Firstly, let's actually start with the GDX here, okay? GDX, because one thing that I'm noticing here on the mining stocks is something really interesting on the mining stocks. Let's start with the GDX. I'm going to go to the weekly chart here first. And one thing I noticed here on the weekly chart is one thing I've done here on the GDX here is I've identified some couple of major areas of support and resistance through here. But if I draw this up even more, one thing I do notice is that this market has had some sort of a false breakout, because we did actually have something going on down through here when it comes to this GDX here. Okay, so we actually had this point through. Notice how we actually had that point through there. And if I create a little parallel trend line and then I zoom that up through there, it's actually more through there, isn't it? Like that there. All right, so it's actually more like, let me start from there. And as you can see, right, we're squeezing up into a bit of a triangle pattern. It wasn't a definite triangle pattern, but we're squeezing up. We actually broke to the downside, but we actually broke down to this level right here, didn't we? We came right back down to this level right here, found a lot of support, and now we've rallied back up and come back down. So what's happening right now on the GDX here? Why am I more really bullish right now on the gold mining stocks and not the silver mining stocks? So one thing we see here, right? We actually came down and found support. And let me bring this up through to here. And so as you can see, right, went sideways, came back down to the support level, bounced up. Now notice this here, the market is starting to show a bit of a trend change in the markets right now when it comes to the GDX market here. So what's happening right now is this: we have this lower high, We have this high, we have a lower high, and we have this lower high through here. So this market's making lower highs through here, which means the sellers are lowering their prices. But if we have a look at what happened recently, what's this here? This is a higher high. Now in an uptrend, we have what? Higher highs and also higher highs and higher lows. So notice how the market is, the buyers are really starting to come in here. We're really through here. There wasn't really anything too clear, but notice how we came down, rallied right back up, created a high or a higher high. Then we came down, created a higher low. Now we're forming this higher low through here. And now the market is picking back up through here. So the buyers are starting to come back into this market where the market really hasn't been too clear through here. Nothing too clear. There was no one in control. Now we came down, higher high, higher low. And so we're definitely, if I draw a bit of a trend line from those points through there, let me do this thing through here, right? So probably something through there, I would say, as you can see. So let me actually, let me delete everything off the screen here first, and I'm gonna let me squeeze this up a bit more. So as you can see, right, we're starting to form this higher low through here. So this could be, look at this here, guys. See what this site, look, what's that? 2007, 2018, and all, like that's 2.5 years of just doing nothing here. That's the calm before the storm. This sideways movement is going to equal really good movement, and it's probably going to be to the upside. So if we notice here, right, look at this here, from this point here to this point here, look at that there. So as we can see, right, we're doing that through there, and also we're doing that through there as well too, right? So resistance, resistance, resistance. Look where it is, resistance right now. So we're creating this higher low through here right now. We start to break above that, then I have my first target. If we start to break above where we are right now, my first target is this major resistance up here, where it's probably going to run straight to there because we're creating a higher low, and now that's probably where it's going to likely to run to. If we start to continue up even more, break past say that $24 level, break past $24 level, then I see this thing running up to 31. Probably going to have a bit of profit taking then. And then I ultimately see this thing rallying right back up to this level through here. So really interesting to see what's happening there on the GDX there. Now, if I go and share with you what's happening right now on the GDXJ, something very similar. I can't talk. Similar is happening right now on the GDXJ, right? So we had all this sideways movement, but the GDXJ it came up around this high and actually pulled back down deeper and creating this high low. So still overall, really nothing going on. We're in this tight range through here. So I'd have to say around that $36 level there. We're in this sort of level through here. If we can hold here on the GDXJ, if we can hold here, and then we start to break above 36, that's now changing the tune, because look at this here. Notice how we had this high, lower high, lower high, lower high, ran down, lower high. Look at this high here. That high is higher than that high and that high. Bit of a warning sign. And now we come back down. This could be some sort of a high low, and now we're picking back up again. If we can hold this level, higher low through here on the GDXJ, if we hold here and then we start to break above say the $36 level there, then I would say this is probably going to start to run right back up towards this level of resistance up here around the 50, 52 level. And then once it breaks that, then we're probably going to race back up towards that 105 level, somewhere around about there. Yeah, around about the 100 level there. Now this is the weekly chart, guys. So that may take a couple of years for that, what I just said there, to unfold, because the daily chart can go up and down, up and down, up and down, up and down. But when we're looking at these markets, we can see what's happening here. So we're getting a lot of buyer strength. Now, I am very bullish on the gold mining indexes right now, GDX and GDXJ, for the reasons what I've just said and what I went through just then. Now, if I go and share with you what's happening right now on the SILJ and the SIL, that is something completely different to what the GDX and GDXJ are doing. Now, as you can see by looking at my bubbles here, The market overall right now on the SILJ is still very, very, very steep on the downside. And every time we rally, we get knocked back down. Rally, get knocked back down. So firstly, we're still creating these lower highs through here. So let me draw a trend line. I'm going to draw some trend lines from here to here. I'm going to just see if I can get this more relevant through there. Okay, so that's that point through there. So notice how this is sort of, let's actually move that up through there. Okay, and we're going to create a little parallel trend line, and we're going to create this level through here as well too. All right, so you can notice how this is still in a bit of a channel, but still to the downside. The market is very, 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 very on the downside here. We still haven't broken out. For this to completely change the tune of what this has been doing, the SILJ, we would need to see a break above this high here. If we see a break above this high here, that'll be the very first time that we've actually broken the high. So we have a high, lower high, lower high. Notice how the sellers, they keep raising it, but the buyers raise it, but they can't. The sellers knock it back down, knock it back down, knock it back down, and knock it back down. So we would really need to start to see a break above that $9 for this thing to completely change. And we go to the SIL as well too. The SIL. So the same thing for SIL as well too. So right, so we could be forming some sort of double bottom through here on SIL, but the silver stocks, not the silver juniors, but just normal silver stocks, sort of doing the same sort of thing here, as you can see, right? So if I draw my trend line, again, this is the weekly chart, but look how relevant that trend line's been for the last couple of years. Started there, resistance, not much resistance through there, but then we had a lot of resistance all through here, and then we knocked back down. We are definitely finding a lot of support where we are right now, around this level through here. So what's happening right now with the SIL, the silver stocks, is this could be some sort of double bottom. Now, this is a double bottom through here. So if this is the double bottom and we actually break the neckline is that centerpiece right there, that little centerpiece right there, which happens to be this whole support level back here, and then we have this resistance back here. If we can break above that $28 level, then how we measure that, let's actually do this up here, how we would measure that, we would take this as a big double bottom. If it holds here and rallies back up and breaks above 28, then what we do is we measure from the high. So we're going to measure basically from the 28 level down to this level here. We're going to extend that out up through there like that. And then we're going to make this point here, which is not a coincidence, by the way. You can see that level there, that's where it's likely to run to around the $34 level, which goes right inside of that next major sort of this resistance level here. So that's what's happening right now. We're getting a bit more buying activity happening right now in this SIL, and that's actually holding a lot of strength right now with that there. The silver stocks are holding a lot of strength here. So if we can hold here and we break above 28, that's gonna change the tune, because the sellers have kept knocking it down on a downward trend. So if we can hold here and make a bit of a double bottom here, that could be a big double bottom, and then potentially maybe this actually starts a big upward movement. We do that, and then we race to the $34 level. Then ultimately, I do see the silver stocks ultimately, again, over the next 2 to 5 years, at least running back up to the 55 level. But we need to see the tune change. We need to wait for the market to tell us that it's changing. And the very first sign is we're breaking above these highs here. If the sellers can't break, if the buyers can't break past this high here, the sellers are likely to knock it back down again. Because as you can see, right, the sellers keep knocking it down, knocking it down, knocking it down, and knocking it down. So that's what's happening right now on the SIL and the SILJ, the silver and the gold indexes here. I really wanted to focus on these because there's a lot of activity that's happening right now around, and silver and gold are taking off. But the really important thing is that it's really important to not try to correlate that. So if you think gold is going to do really well, don't go trade JNUG or the GDXJ or the GDX or any of those because you think gold's going to take off. What you want to do is you want to say, okay, I'm trading the GDXJ or whatever, I'm trading that. I'm getting into that because that's actually a really, really, really good position for me that I'm trading there with good risk management, of course. So I really wanted to cover this for you because I know there's a lot of people out there starting to think, well, I'm going to buy the gold stocks because gold's taking off and so on and so forth. As we just went through today, the gold stocks are so much more stronger right now, and the buyers are coming in a lot stronger right now into those gold stocks than they are with the silver stocks. Same with the silver and gold. Gold has been taking off like a rocket, but the silver, right? Silver's been holding behind. So the silver and the silver indexes, the silver stocks, have been sort of just lagging behind. Gold's been taking off, and the GDX and GDXJ has also been having some nice bullish moves as well too. Buys are really starting to show their hand when it comes to those GDX and GDXJ. But the silver and the SIL and the SI, the silver miners, and also the silver junior miners, there's been a lot of weakness in the markets there. So that's what I wanted to cover for you today, guys. Just a short one there. Jay. Hey Jay, how you going, man? Hello, sir. Hello, manager. Investing Futures Finance. Hello, Investing Futures Finance. Hope you're doing well there. Alrighty, guys. Well, that's it for me today. I just wanted to do a quick one today, but just a really quick update to share with you what's happening right now with these indexes here. I've been getting a lot of people asking me what's going on with those. And also there's a lot of things happening where they think if gold's going to take off, I'm going to start to trade the gold miners. If you want to trade the gold miners, you want to trade the gold miners because you like the gold miners and you've got good risk management with that there. And please, guys, if you are going to get into any position, make sure that you have your level where you're going to get out for a loss if it is going to be a loss, because you can't guarantee what's going to happen in the future. And make sure you say, okay, if this is a loss, if it gets to here and this is the loss, I'm still protecting my account. So what I mean by that is, like, if I have a loss, I'm probably going to have anywhere between a 1 to 2.5% loss on my account. If I have a loss, that's my average loss there. So as you can see, right, I'm protecting my account. It's so important to protect your account when you are trading these markets, because if you don't do that, then you're going to get completely wiped out. And it's so important to protect that. If you can protect that, then that's when you can really start to grow from there. So please protect yourself. Don't risk too much of your account on any given one trade. Don't try to go for that home run or that home hit or say, oh, you're all in, because no one knows what's going to happen. I may get into a really good trade today, and even though it may have a 90+% success rate, something may happen and I may lose money on that position. I don't know. So please, guys, please protect yourself. Always say, when you get into a position, say to yourself, if this is a losing trade, have I protected myself? Which simply means that if this is a losing trade, if the market gets to here and this is where I'm going to get at for a loss, what's that going to equivalent to percentage-wise on my account? And as I said to you before, I always like to keep it between that 1 to 2.5% risk on my account. And by doing that, I'm limiting myself. Now, the flip side, guys, is one thing I like about that is when I'm trading options, because I trade options, the best thing about that is that a lot of my trades, especially lately, they've been running on for 100%, 200%, 300%. So when I trade options, I will trade 5% of my account on those options. And if I do have a loss, I know the average is going to be anywhere between maybe a 30%, maybe even up to 50% loss, which equivalents to which goes into around about say, 2.5% of my account, maybe a bit bigger. But what happens a lot of the times with options is that if you know how to get it right, then especially lately for me anyway, these trades I've been getting into have been running on for 100%, 200%, 300% return, and sometimes more. So therefore, if you look at that, right, I'm risking on average say 2.5% on average, but the trades have the potential to then go to 100 to 300% return. So if you look at, say, for example, the last trade that I got into, I didn't capture it all, but the last trade ran on to about 300% return. or call it even 200% return. So if you look at that, right? If you look at that, my risk was say 2.5%, but on my account, but the profit, because it was 200% return, 200% of a 5% position is 10% growth on your on the account. 300%, which actually some of my private clients actually got, that's a 15% growth on your account. So as you can see, guys, right, like when you are trading, try to do that. Try to protect yourself. So if this is a losing trade, I'm protected. If it's going to be a good profitable trade, I'm going to do really well. And especially with, as I said before, especially with options, and if you buy the right options with enough time, if you're buying it 3 days out and stuff like that, that's not going to work. You need to have a bit of time, trade in the money options, give yourself a bit of a buffer, stuff like that. And also obviously a good strategy as well too. Please, guys, protect yourself. There is no guarantees of making a profit on any given one trade. We never know what's going to happen. So the number one thing that is so important to you to say to yourself every time you get, like, I'm in a trade right now. If this is a losing trade, my account's only down about 2.5%. I'm good to go. So I had that sleep at night factor. The worst case scenario is I lose 5% on my account. The absolute worst case scenario is I lose 5% on my account. I still got 95% there. And so from that process, I can sleep at night and know that if the whole world turns to custard, I'm good, I'm okay. But the flip side, if this trade runs on over the next couple of weeks for a really nice profit, like a lot of my trades have been doing lately, then I can pick up a nice 100-200% return with these options. And again, it's that risk to reward ratio there. So I know that I'm repeating myself here, guys, but every time you get into a trade, say to yourself, if this is going to be a losing trade, because there's no guarantees of making a profit on any given one trade. We never know. Something could happen. And even when you are trading stocks, even when you are trading, every now and then there might be an announcement that comes out with that stock or something like that, and something happens. If this is a losing trade, what am I risking? And how much is that on my account? And am I comfortable with that risk? So if you're trading, say, 50% of your account on one stock, and then you're risking, say, 20% or whatever, you know, if you're risking, say, 10-20% of your account on any given one trade, that's too much. Way too much. You don't need to do that to grow. I think a lot of people think they have to put a lot of their account on one trade to try to get that big growth on their account. The actual opposite, because when you start to trade with small risk on your account, guess what happens? You start to be much more emotionally controlled. You don't jump out really quickly if it's going against you, just slightly when there's no need to get out of it. And then, or if the market's running on you for a nice profit, right, you'll just let it go and let it do its thing. By doing that, you're actually being a lot more calmer. You actually do a lot better by doing that. I'll give you an example. What I mean here is that if you trade, say, if you have 2.5% on, say, risk on your account on any given one trade, that's 2.5%. Say you're trading 5% of your account, and you're doing that, and your average loss is 2.5%. Well, that one trade, right? That one trade, because you're not risking that much, you're not afraid of having a loss, or if it does run on for profit, you're not scared of losing that profit, because there's really not a lot of emotion attached to it, because it's only 5% of your account. So what ends up happening, right, is that you let that trade run on, and over the next couple of weeks, that trade runs on. That trade runs on for, say, 300% return over, say, a couple of week period, and you're like, thank you very much. My account just grew by 15%. But the flip side is, just say, for example, you're trading, you've now got, say, let's say, for example, now you've got, say, 10% of your account at risk. Just say you're trading that. What can happen, right? What happens, right, is the market might not do much for a couple of days, and as soon as it runs on for some sort of profit, you're like, oh my goodness, I've been in this for 3 days, it's done nothing, and now it's actually running on for profit. There's a small profit there, and then you watch one more day. Oh my goodness, there's a 30-40% profit there. I better get out right now just in case I lose it, or just in case this turns into a losing trade. I can't afford to lose, and you take that profit. It's a 40%. Say it's a 40% profit of that position. Your account is now up. Your account is now maybe up, say 4%. Call it that, because you're so nervous. And so as you can see, right, by trading a smaller amount and not being emotionally attached, you can let these things go. And in the long run, you can do so much better. So please, guys, please protect yourself. I hear so many stories of people blowing themselves out of the water and doing that. And that's the number one biggest mistake that I've made in the past, has been doing that. The best thing that I've done is that one thing. What is my risk on this trade? And am I comfortable with that risk? If the answer is no, you are trading way too much. And if you're trading way too much, you're going to be emotional. And that emotion is probably going to cause you to do things which is going to cause you to get out of that trade for a loss. Like recently, me and my private clients got into a trade, and we got into the trade, and for 2 or 3 days, the trade did nothing, just went sideways. Some of my private clients that were trading just a bit too much of their account, I could tell they got out really quickly for a loss. But the system didn't. My system said stay in because there's no need. And within a week later, that actually ran on for a nice profit. And then another week after that, then it ran on for 200 and 300% return. So the traders that are trading way too much, they were very nervous. They actually got out for a loss, and the traders that they weren't held on. So anyway, guys, that's it for me today. Have an amazing day today, guys, and I'll catch you guys next time.